Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you stay up to date with the latest and greatest things happening within the crypto space and also the broader markets, and that's exactly what we're going to be doing in this video. We've had quite a bit of economic data coming out this morning, and we are going to be taking a look at that and relating it to the dollar. The dollar is an extremely strong headwind for risk assets. And it's been very strong still, despite potentially there being a inflection point for the dollar after a very strong uptrend. You know, we did look at the possibility of maybe having a risk on period that was largely going to be enabled by the dollar coming down. We are going to be updating you on that as we're seeing a lot of dollar strength. However, we did have ADP numbers come in this morning, which were weaker than expected. We also had a number of sort of fundamental things happening at key technical levels against dollar pairs. So the yen, for example, with the yield curve controls, and then allowing yields to climb a little bit higher, i.e. bit of strength for the yen. However, this actually hasn't transpired, and the dollar, despite potentially being at an inflection point, is still being exceptionally strong. And this is a really strong headwind for risk across the board, and we're going to be looking at that. We're going to be starting the video off, however, though, by looking at a number of things. Very quickly, guys, always shameless plug. Do not forget to come and check out allincrypto.com. We are building a platform to not only keep you guys up to date as far as latest news and all the greatest things happening, but also we're actually trying to build utility into it in the sense that you guys will be able to do a number of things like get your chart information, price feeds, and everything in between from the site. So lots of big news coming over the coming weeks. Let's kick the video off with a tweet from Gary Gensler yesterday. Rather an interesting one. He tweets, if Satoshi Nakamoto went as Satoshi Nakamoto for Halloween, would we be able to tell? Happy 15th anniversary to Satoshi's famous white paper that started crypto. Any crypto companies that are tricking investors should start treating them to compliance with the securities law. Very interesting. Gary Gensler is an annoyance for the crypto industry for sure. However, I do think in some cases, you know, and it's quite contradictory that I'm even saying this, because can you really rein decentralized protocols in with global decentralized protocols in with US regulations? But there are definitely needs for somebody who's been in this space for a long time. I've seen a lot of horrors in regards to the cryptocurrency space, and it's a shame that it ultimately tarnishes like FTX. You know, when people say crypto, when I say it to sort of quote unquote normal people, i.e. people that aren't sad enough to spend their entire life like myself dedicating themselves to the distributed ledger technology space, you know, they think of FTX and these things and these kind of BitConnect-ish things, Luna, that have happened. And there is definitely the need for compliance in certain areas, and there's absolutely been trickery from certain crypto companies and cryptos issuing tokens, dumping them, and rinse and repeat, and so on and so forth. So I do think there is a need for compliance in certain areas, but Gensler's approach, in my opinion, is totally wrong. Very interesting, and actually, this was one of the first emails that Satoshi sent out on the 31st of October, and this was where he kind of introduced his white paper that was titled A Peer-to-Peer Electronic Cash System that we have looked at previously. This is very interesting, and actually something that I've incorporated into my book that I'm currently writing, where we start the book off really by looking at this industry, comparing it with other technological revolutions, and actually looking at the kind of evolution of it. Just like with any other tech revolution, you know, we use the automobile industry in the book, where we look first at Nicholas Joseph Cugnot, who was the first person to create a self-propelled vehicle, i.e. starting off the automobile industry, and then we go right the way down to Henry Ford, who looked at mass production. We cover Maybach, a number of other Benz, a number of other people, and compare them with cryptocurrency and its, albeit significantly faster, revolution. But a very interesting tweet from Gensler. Something very interesting to me, and we actually have looked at coin inflows from CoinShares. CME is about to flip Binance as the largest exchange with respect to Bitcoin futures open interest. Institutions are here, and it's getting started. The physical market will catch up. So we really have assessed a fundamental change in the cryptocurrency market really from the start of the year, and Bitcoin has largely danced to our tune. We also have a kind of macro thing, which we're going to talk about in a minute, with the dollar and you know, the S&P, where it's at, and all this stuff, that, you know, there's now an appetite for crypto. And you can see this broadly being represented with the likes of what Think's saying and others. with Bitcoin, once you have an ETF, it really does open the gateway to portfolio managers, because they will actually look to diversify a portfolio in order to benefit it. There's this kind of concept of alpha, which is often used on FinTwit to describe many other things. You know, people say they're giving alpha and this sort of stuff, but alpha in its traditional form was applied to portfolio management and actually finding uncorrelated assets that will offer you a benefit to the overall portfolio, and actually also hedge risk because of the uncorrelation, and minimize downside but maximize upside. And this is something we can explore if anybody's interested in portfolio management stuff and stuff I do talk about with my Patreon. But, you know, institutions are here, guys, and we can see that through CoinShares. We can see that through CME, which is by all accounts, retail aren't using CME, to be honest. You know, they're using things like Binance and Coinbase. I think Coinbase is fantastic. It's going to be one of the largest companies in the world eventually. But that's enough on that. So very interesting all around the ETF stuff. Genslers' comments are certainly interesting. We also played a clip earlier in the year, not earlier in the year, I think it was even this week, where we looked at Gensler actually saying, it could have been on Sunday actually, so end of last week, where Gensler said, look, there's a kind of anomaly or a sort of no reason for there to be futures and not spot. So a spot ETF is coming. DTCC, which is essentially the clearinghouse for, you know, they did 2.5 quadrillion in terms of assets. They do that annually pretty much. They're basically the clearinghouse for the Nasdaq and things like that. They have now actually listed an ETF for Invesco and Galaxy on top of with BlackRock. And this is in kind of preempt that an ETF will be approved. An ETF will be approved, guys, and that is monumental for the crypto space because asset managers will undoubtedly look to use it to bolster their portfolios, albeit potentially in a very small, initially at least, capacity. This is huge, and actually we have a video and an article coming out on the website about DTCC, who recently bought Securrency. And Securrency actually utilize a very well-known cryptocurrency out there and have done pilots with this cryptocurrency to facilitate the sort of remittance, giving away potentially what the cryptocurrency is there, of tokenized markets. So it's very, very interesting. Today we had Canada actually officially in a technical recession, which is defined by 2 negative quarters. And this is going to tie in nicely with where we're going. And actually the stock market, you guys will know, we've given the factoid that the S&P will rally 2% of its high, so 2% roundabouts of its high 2 months prior to a recession. So it will start to price in a recession 2 months prior. When that recession comes is going to really determine your outlook on the market, in my opinion, based on that fact. And it's my assessment that the recession, and I could see maybe a technical one, but the real shitstorm comes later on. This is fundamentally how we've been long on the markets, i.e. 2025-ish, maybe end of 2024. We don't think it's in the imminent future, and the markets will climb up until that point. But we could be wrong on that, and it's important to watch other economies, how they're doing. Potentially, the thing is with, if you look at all central banks right now, actually including the Bank of England today, I believe, they are not going forwards with higher rates. And you've got the Fed rate decision today also. And I believe the reason for this is because of the bond market. And you've got to think, and this is why we actually think the shitstorm doesn't come later on, until later on. With interest rates, they lag, and refinancing occurs later on. So right now, there's still people that are benefiting from fixed mortgages, fixed loans, with a very low interest rate. But as things get renewed, you move from 0% or whatever it was for the banks, pretty much 0% or 0.25% to now 5.5%. That's massive. That causes real issues. It's likely what the yield curve's predicting coming down the line. And our intricacy job is to guess what the markets do, first of all, on when that actually happens, and to guess what the markets do up until that happens. And our assessment is that they're going to do quite well. And that is just my assessment, and I position accordingly. If you want to find out what I'm buying and when, do consider becoming a patron and getting access to my full portfolio and multiple other things like courses. You had Stan Druckenmiller today come out and say governments need to stop spending like drunken sailors and cut entitlements. He's previously came out and said this. He's been very vocal on the reckless nature of government spending. We had news from the Treasury in their recent report. Lynn Alden tweeted it, that they, in the next 6 months, are going to print, you could say, $1.6 trillion in new debt. And here we go. Treasury details plans to set up, I didn't even see this, size of bonds, sales to manage growing debt loans and higher interest rates. So, Satoshi Nakamoto, whoever he, she, they, or whatever government or agency or network it was that created Bitcoin, was nothing short of a visionary and clearly understood the financial systems and the cracks within it. Fiat systems are becoming literally like a game of Monopoly. And actually, we've already seen many of them go into hyperinflation. The dollar will be the last man standing. This is the whole concept of the dollar milkshake theory. The dollar is the world reserve currency. In the book that we're writing, we actually go through the history of money and the gold standard and how we got off it, and the fiat systems, and where Bitcoin finds itself potentially as the evolution of that, or a new concept of money. It's very interesting what's going on with government spending and stuff like this, and the kind of spiraling that we're witnessing. And actually, this could be to the benefit of Bitcoin and certainly things like gold, which are alternative systems. I think that we should be friends with the gold bugs as crypto bugs. Because we're almost fighting the same fight, right? We're looking for a value. It's Austrian in its nature, really. What we're talking about here, and a kind of good money driving out the bad, and maybe we see this occur. But government spending is ridiculous. Larry Fink actually said this is why he doesn't envision a hard, soft, or any kind of a landing in between until later on. Is simply because of all the government spending and the largest non-wartime, non-crisis spending ever. And this is the nature of the system. It gets bigger, it gets bigger. It's like a snowball going down a hill. Moving on to the dollar, we have looked at, really it was based on this weekly candle, which is a real hammer, showing strong selling coming in. You also had key levels across the dollar pair. Remember, the Dixie is mainly against the euro, but it's got the Japanese yen in it. It's got the dollar, the pound in it. But since then, and this is why we've been very cautious, it's kind of sort of forming a platform, if you will. It's very strong, and this is continuing to be a headwind. And right now, you could really just chop this up into a range. And a break to either side of this range is likely going to be followed with a move. Maybe you get some sort of a deviation outside the range and you come back. But if you break this strongly and hold, the dollar's going to see that continuation. And actually, we have looked at this potentially being a stage 2 breakout that you're adhering to right now. So this is a real headwind. You can see a very stark correlation between, dollar up, just very quickly, Bitcoin down. Bitcoin turned later because of FTX, but to bring on the SPY, this is generally the same for risk. Risk turned pretty much at the exact point of the dollar. And then dollar down up until this point here. What did risk do? And then you've had this real turning. If you're not already a subscriber, guys, please do subscribe to the channel. I do genuinely feel like we are trying to get the best and the most education we possibly can into these daily market updates, because I absolutely do care about you guys. I think that they keep people where they are through a lack of financial education and a deliberately confusing system. And if you can understand that better, it's like playing a game, right? You're going to probably play the game better if you understand the rules and how the game works and the mechanics behind it. And that's kind of what we do. And we link crypto into this as a kind of real opportunity. And that's genuinely how I see it. So if you're not already a subscriber, please do so. Remember, like, comment, and subscribe really does help us push this out to a wider audience. And of course, share it around your communities. But we need the dollar now to do this. And risk will do this. It's a bit of a kind of symmetry we've got going on here. But this is what we need to take place. Dollar down, risk up. And so far, speculating on this, risk caught a slight bid. Stock market's rolled over on quite negative earnings. The bond market is just hopeless, despite actually us seeing quite large inflows into treasuries. And you know, property being interest rate sensitive is getting hit. Maybe it gets a bid on the no hike. You know, this is the thing. We've got lots of economic data. We had ADPs, which is employment data, a barometer for the economy at broadly, but also unemployment's a double-edged sword because bad unemployment is also a double-edged sword with the stock market. Employment at a low, unemployment at a low, stock market at a high, and vice versa. So if we see that tick up, we've got multiple things to contend with. What else did we have today? Obviously, we got Canadian GDP. I believe it's the Bank of England's rate decision tomorrow, I think. GDP. Or it could be actually today. I can't actually find this. Regardless, you've got the Fed decision today. And then the big one for me is going to be non-farm payroll on Friday. And we'll see what happens here. You know, non-farm payroll last really bolstering the dollar strength was 336. The expectations were under 200,000. Today they're aiming for 100. Friday's report is aiming for 179,000. We'll see. Dollar's got a roll, guys, for us. Gold. Maybe if we flip to gold now, and then we can look at Bitcoin. Let's do this actually over on a different chart. We'll come to Bitcoin in just a second throughout the video. Gold is you know, our opinion on gold is it's in a bull flag that is potentially broken to the upside of. Once you break this range, you're in price discovery, it's going to be explosive. Gold, you can see a move to 3,000. We've got high targets for the S&P, and also we think Bitcoin is going to do well. It all needs to play out though, and they could all align, and there's kind of correlation there in regards to thinking across the board, and also factoring rates and the lagged effect. Dollar needs to roll for this. It really does, and it's been surprisingly strong. If it can't break this though and it gets rejected, that's good. Debt. You know, you've had a lot of big prominent people. We've actually interviewed one of them that was basically telling you to buy bonds and that it's a bond trade, and just continued to get wrecked. You know, markets, this is so factual. This is so fundamental to everything that it needs to, you know, it's a real pressure point. Yield curve coming slightly back down again, which we've looked at, but not by much. You know, at the point of an inversion, that's when we start to get worried about the demand destructive event, so on and so forth. This is likely going to be what we looked at yesterday as in a stage 2 breakout for oil. So the oil could be a barometer of the economy broadly. So we're still waiting on dollar strength to roll. Bitcoin is doing Bitcoin. You know, we think Bitcoin's going significantly higher, at least to the 40Ks. Could be by the end of this year. On the short term, it's got even shorter. You know, this could still be ready to set up for a breakout. And actually, you've got similar structure for total. What do we want? Very ascending. We'll see. What kind of a draw have I got on here? Bloody hell. Yeah, so we're still bulls. We just think you need that dollar to roll, and ultimately we're going to position accordingly. And that, I think, ladies and gents, is really all I've got for you. Please do come and check out allincrypto.com. In the coming weeks, we are going to be announcing lots of things in regards to tools that you can access totally for free. We're not charging anybody anything. There's no paid content on there. The only thing that I do that's paid is Patreon. You know, allincrypto.com is going to be your one-stop shop. Mark my words on this, guys. Not just for the people that subscribe and watch this channel regularly, for everybody. It's going to be the go-to place for crypto, certainly when it comes to news and features to get further insight into the crypto space. We're really working very hard on it. We've got lots going on behind the scenes, and we hope you join us on that journey. On that note, I'm going to love and leave you guys. I'm wishing you all a wonderful Wednesday, and I'll catch you all in the next one. Thanks for watching. See you in the next.